You see a $100,000 trading account for a small evaluation fee. It feels like access to $100,000 of opportunity. But that headline is not the number that controls whether you survive. If the account fails after a $2,000 loss, then $2,000 is the real room your decisions have to work inside. The larger number may describe buying power or a planned tier. The smaller number decides how quickly a mistake ends the attempt. This lesson is about the 7 rules you should understand before you pay for, or trade, any prop firm evaluation. Not because every firm has the same rules. They do not. The point is learning exactly what to look for in the current official rulebook. This is educational, not financial advice. Trading involves risk. Start with the headline number, $100,000. Now put it next to the rule that matters, maximum allowed loss. For a simple example, suppose the maximum loss is $2,000. 2,000 divided by 100,000 is 2%. That means a trader who sizes positions as though $100,000 were truly available can break the account very quickly. The important question is not, how large is the account? It is, how many normal losses can my process survive before a rule is broken? The first line you read should be max drawdown, not profit split. Total drawdown is not always the first boundary you hit. Many rulebooks also define a daily loss threshold. Imagine your total loss room is $2,000, but the daily limit is $1,000. A trade plan that risks $500 per attempt gives you very little room for a normal losing streak, slippage, or an execution mistake on a single day. You can be far from the total drawdown and still fail because the daily line was crossed. Before a session begins, convert the daily rule into a stop trading number. If the number of normal losses you can tolerate is too small, the position size is too large for that rulebook. Now look for the word that changes the entire experience, trailing. A static drawdown line stays in one location. A trailing drawdown line can rise when the account reaches a new high, depending on the provider's calculation method. Here is a simplified example. Your starting balance is $100,000, with a $2,000 trailing threshold. You make $1,500, and the trailing line moves upward with that high watermark. If you later give back those gains, the room left before failure may be much smaller than it felt during the winning moment. Read whether the calculation trails balance or equity, whether it updates intraday or at a close, and whether it eventually stops trailing. Those details are not decoration. They control the strategy's breathing room. Futures exposure is not measured only by the number of clicks on a buy button. A contract has a tick value, and more contracts increase the speed of both gains and losses. An exchange education principle is straightforward: choose contract size and position size from your risk tolerance, not simply from the maximum a platform permits. If a rulebook says you may trade a maximum number of contracts, that does not mean that number is sensible for your drawdown room. A smaller size may be the only size that lets a strategy survive ordinary variance. Read contract limits beside drawdown limits. Never read them separately. Some evaluations restrict trading during certain news events, holding positions overnight, or using particular products or strategies. Other programs may allow them. Rules vary. This matters because a trading approach can be acceptable in one account and a breach in another even if the market direction was right. Before paying, look for 3 sections: prohibited activity, restricted times, and allowed instruments. If the strategy you intend to learn depends on holding overnight, trading major announcements, or using a certain market, confirm that it is actually permitted. Being profitable on a forbidden trade is still a rulebook problem. This is where many beginners mentally finish too early. They reach a profit target and begin trading as if success is already locked in. But a rulebook can include minimum trading days, consistency tests, scaling rules, payout windows, or withdrawal conditions. The profit target may be one gate, not the finish line. Ask, how is consistency measured? When can a withdrawal be requested? Are there minimum days? What changes after passing? Is the account simulated or live, and what is the actual contractual relationship? The responsible approach is boring and powerful. Write down every gate before you begin, and do not trade as though the final gate is open until the official terms say it is. The final rule is about the business, not the chart. Do not rely on clips, referral links, or a creator's summary of a firm. Go to the official terms. Save the current rules. Check what the company says about fees, refunds, payouts, account status, prohibited conduct, and dispute handling. For regulated products and intermediaries, use the relevant regulator's registration and background check resources where applicable. The CFTC specifically warns traders to get information in writing, check background information, and avoid money they cannot afford to lose in high-risk trading. No video can replace that review. This video can only make you less likely to skip it. Before you pay, answer these 7 questions on paper. 1. What is the maximum loss, in dollars? 2. What is the daily loss limit, and when does the day reset? 3. Is drawdown static or trailing, and how is it calculated? 4. What position size is allowed, and what size can your risk room actually survive? 5. Are news trades, overnight positions, or certain products restricted? 6. What conditions remain after reaching the profit target before a payout is possible? 7. Where are the official written terms, and have you read them yourself? If any answer is unclear, you do not yet understand the product you are paying for. Edgewise Markets is here to make the rules visible before the risk becomes real. Next, we will separate futures prop firm programs from Forex and CFD style programs, because the product underneath the screen matters as much as the rulebook above it. Comment with the rule you want broken down next: daily loss, trailing drawdown, consistency, or payouts. Subscribe for market education built around risk and clarity, not signals and hype. This is educational, not financial advice. Trading involves risk.